Thank you for joining me. I'm Juan, lead trader and founder of ProsperiTrade. In this video, I'm going to discuss China and its recent news, why Cathie Wood is selling some of her China stocks, and why she's warning of a valuation reset. So please stand by for the video. Thank you. A few months ago, I made a video on TIRX stock analysis, why it pumped and dumped. If you look at the stock, you see it IPO'd and spiked up to a high of over $100, dropped a little, rebounded, had a double top here, and just in one day crashed all the way down to $10 from this $90 area, a major loss. And I spoke about how when you do your due diligence and start reading about the company, its financials, there's major red flags. So today, China came with some news.
The market, and that is Chinese stocks, specifically some of the stocks that are now being targeted by the Chinese government. We've been talking a lot about this lately, in particular the latest round of regulatory pressure. Look at those moves.
Duties from listing here, maybe we shouldn't fund them. That had been a big issue with the previous administration. Kind of just talked about it. Turns out they don't want us. They don't want our money. It seems like they want to destroy American stocks. Now it's.
If you watch the news, it can seem like the most gloomy, doomsday, worst case scenario ever. But all you have to do is do your due diligence, have confidence in the stocks that you pick, and have confidence in your research. I've been trying to put together a list of value stocks, meaning stocks that I identify to be undervalued. These aren't growth speculation stocks, with the exception of SMLR. These other stocks, when I do the intrinsic value, I feel like you're getting a good bang for your buck. And I had some Chinese stocks, JD, BABA, and it was difficult for me to accept or proceed with investing in these companies. I haven't invested in them just because of the issues surrounding China. But today, after China's news and all the China's markets crashing, it confirmed my suspicion, it confirmed my intuition of not investing in these companies. And let's take a look at some of the headlines. Yahoo Finance, China's stocks tumble in panic selling amid broad crackdown. China's stocks tumble in U.S. trading, and investors should remain weary for now. China's stocks tumble in U.S. trading. Why Chinese stocks were plunging again today. China's escalating crackdown on business and moving stocks. Stocks hit record as U.S.-China relations keep getting worse. China doesn't care how much money you lose. China stocks in U.S. suffer biggest two-day wipeout since 2008. Disturbing actions by China signal early stages of Cold War. U.S.-listed China education stocks tumble again as Beijing makes industry crackdown official. So what's going on in China? Why is Cathie Wood selling China stocks and warning of a valuation reset? So what exactly is going on with the market? So what's going on with China stocks today? A couple of things. First, China imposed a number of strict rules on the for-profit tutoring sector. Investors are increasingly weary of Beijing's influence over publicly traded companies. So those are the two main things that caused a lot of the other stocks, including tech stocks, to drop drastically. Basically, these shares dropped because fear of regulatory crackdown. This was announced on Saturday. Beijing announced regulations that mean that for-profit educators can no longer accept overseas investments, raise capital from the stock market, or be directly acquired, or even teach school curriculum classes on holidays and weekends. This unpredictability from Chinese government is what's fearing and putting fear within the shareholders. If you remember last fall, the IPO Ant Group and the controversy around that, Alibaba and Jack Ma, some of the remarks he made regarding Chinese financial regulators. Just a few weeks ago, the recent IPO of Didi Global crashed after regulators removed its app from the country's major app stores. So what does this mean for investors? Is the dip an opportunity to buy some of these stocks? There are going to be some analysts that state this, that possibly say this is a good opportunity. When I did a DCF on JD and Alibaba, financially, if you put their financials together and estimate their free cash flow and do all the math, they seem to be very undervalued and have great upside potential. The only risk is China and its regulation. So there was an article that came out regarding Cathie Wood shedding Chinese stock and warning of a valuation reset. So what does this mean? This is the position that I'm taking. It's difficult to say what the bottom is. It's difficult to accept investing in a company as undervalued as it seems, like JD and Alibaba and Tencent. These are what seem on paper to be great companies. They have great potential, they have great business models, but they're in a country that can enforce these regulations and cause fear in the market. So I think the best and safest position is to hold on to your money, because if you don't invest it, you can't lose it. And just wait to see what happens, wait to see if these countries rebound, but just know that there's always that risk. It's just like the growth investor versus the value investor argument. The value investor is always going to say that every trade that they take, they're being extremely conservative and they're giving themselves that wiggle room. If the price drops, they don't lose as much because they were conservative and they bought the company at a discount. As opposed to the growth investor, they're stating that, okay, it's not valued properly right now, or it's a growth stock that doesn't have free cash flow, so you can't do a proper valuation, or whatever it is. But this company is great. They're building a moat. They have something that the market can't compete with. So I'm going to invest in this company. You have to find a middle balance course, whatever you're comfortable with. Me personally, I understand the valuation aspect of it. When I build a portfolio for my kids, as I'm doing now, I want something that's going to be safe. I don't want something that's high risk. I want to buy stocks that are undervalued and have upside potential. And when they reach their targets, I want to reevaluate them and see if I want to continue investing in them or sell my positions and find another undervalued stock. I want to be able to balance their portfolio so they don't get too much exposure to any one sector, not to invest too much of your capital to any one company. All these things have to be done when you're investing long term and you want to be safe. Now, me personally, I have a portfolio where it's safer, it's slower growth. And I also have another portfolio just for growth stocks, where it's a lot smaller, where I'm comfortable with the loss, but I believe in the potential upside. And those are the videos that I've done on YouTube, because the other stocks are easy. You know, you have, for example, Intel. Intel is not an exciting company. Some people say that the technology they have is becoming a little bit obsolete. But regardless, if you look at their valuation, if you look at the cash that they have on hand and the revenue that they're making, they are trading at a way discounted price. I think there's upside potential over the next few years. So it's not an exciting investment, but it's a safe one, and it's something that you should have in your portfolio. AMDs may be a little bit more exciting. It's finding those stocks that maybe they aren't as fun as a growth stock. They're not as fun as a Tesla, but they're safe. Where if you do the valuation and you're conservative and you don't overestimate and just choose conservative values to give yourself an intrinsic value, and you give yourself that room so that if it drops, you're still safe, then that's the way to go to maintain your wealth. And that's how the great investors of the past have done it. For me, I'm not going to try to look for the dip on JD, on Alibaba, on Tencent. It may very well drop more and rebound, but I'd rather just stay with companies that I know are safe and invest with companies that I feel safe and comfortable with, and do my due diligence on stocks. Just like I recently did SMLR, I did my due diligence. I did everything I could as far as research, as much as possible, and I feel comfortable promoting the stock talking about it and investing in it. And I'm positive that when they have their earnings coming up on Monday, that I feel that it's going to be positive earnings. If you just want to be extremely safe and choose a couple ETFs and not look at it, then that's the best thing for you. If you like to engage and know what's going on and adjust your portfolio and do things and feel active and if it's fun for you, it's something you enjoy and you're profitable, then take that route. That's the route I choose. So just know how you like to trade. Be conservative. Don't follow hype. Protect your hard-earned money. That was my video. Thank you for watching. Please don't forget to subscribe, comment, and hit the like. Thank you, and see you on the next video.